Well, can't afford it on a 30-year, but jack the price, jack the rate, and extend my loan terms out 2 decades and sign me the fuck up. Thank you for checking out Real Talk Personal Finance. Shit's about to get real. Cashflow King here with you this evening on a wonderful Tuesday, Veterans Day evening, November 11th, 2025. Burning the candle at both ends here for you. Needed to get an episode out. So thanks for taking the time to tune into tonight's show. Let's get into it. In today's episode, we have 50-year mortgages. That's actually not what I was going to do this show about, but I've been hearing a lot about this in recent days and wanted to throw in my 2 cents and comment on a couple things. So we got that going on. We're going to look at an article today. We're going to look at some ChatGPT shit today. We're going to look at some listener feedback today. So it's going to be a good one. Before we do that, just want to give a special shout out. I see that Dallas, Texas is coming up here on the charts, officially hitting number 4 in all-time listenership in the United States. So I do like some Dak Prescott. So in the words of Dak Prescott, here we go. He didn't say it like that, but here we go. All right, so let's get into it. First, we're going to go to some listener feedback, and this first one's from Cashflow Rockefeller Prince. I've actually had this in my inbox since Halloween, and I wasn't sure if I was going to write you back or do a blurb on the show, so I've just kind of held it there. I'm going to read his email. It's kind of long. There's a lot of parts to it, and I'll respond as needed as we go. So, hey man, sorry for the delay, meaning to write back, but dealing with these HR demons have made things complicated. Anyways, below are some thoughts I had over the last few episodes. Number one, I'm still shocked at the 14 subscribers, but it is interesting to see my episode as number 1 in terms of downloads, maybe because the topic is different than the typical personal finance topic. He's talking about his podcast he came on and did on Secrets of Overemployed, which is our number 1 most downloaded show of all time. So if you've not checked it out and you're a new listener, feel free to go back and check that one out. Not sure if you wanted to grow the show, but maybe going back on the Millionaire Unveiled podcast and doing an update and promoting the show. Yeah, I don't really do much of anything other than get on here and bitch to promote the show because, again, I need to try to remain anonymous for work purposes. And I was on the Millionaires Unveiled podcast, and that's probably, I think, or maybe I'd have to go back and look. Number 3, number 4, number 5. It's in the top 5 all-time shows on this podcast, but not nearly as much to the extent of the Overemployed episode. But anyway, I don't do a lot to promote the show, and quite frankly, that show, in my opinion, has gone a little bit downhill. I've not been too pleased with some of the guests they've had on recently, so we'll save that for another day, but that's fine. It is what it is. Love the Mythbusters episode. Here are my thoughts. Number 1, fuck that guy who wants to get on the show and not even be a subscriber. Out of curiosity, do you get a lot of reach outs of people wanting to be on the show to sell something? Also, mad props for calling them out directly, for asking but not even engaging with the show. Yeah, believe it or not, we do. A lot of times those emails go to our spam or junk folder. I don't know if it's just AI-driven, bot-driven, or people that are just on these, they go around to different platforms like TikTok or YouTube or whatever and blow people up trying to tell them how they can optimize their show and get them a gazillion downloads and followers. And hey, maybe I should take up one of those people at some point in time, but it just seems very salesy, very slimy, very scammy to me. I don't really like it, so I decided to not really go in that direction. Number 2, he says, for the most part, I agreed with each of the Mythbusters except for number 7, retirement accounts are meant for retirement. I really don't believe you should be touching your retirement stuff unless it's an extreme emergency. I don't believe the water heater example you gave is really a true emergency. I think there are other ways to go around stuff like that. And that's fair. He's alluding to, there was a client where, you can go back and listen to the episode, but I did give an example where somebody did use a loan against their account to get out of a situation for her HVAC, basically. And yeah, everyone's going to agree or disagree with that. Everyone's going to have different opinions on what you should or shouldn't use your retirement account for. People do some crazy things sometimes. I'm not sure if I mentioned this publicly on the show or not. I think I may have. And looking back, if I had to do it again, the decision in and of itself, I think, was okay. But the property, knowing what I know now, I would not have done it for this particular property. But I have used once and only once a 401k loan from my own 401k plan to fund a down payment on a rental property. So essentially finance the sucker at 100%. I did an 80%, I think it was 80%, 75 or 80% loan to value on just a typical conventional bank loan on the investment property, and then I took the difference in the form of the down payment from a 401k loan. I think I had just made another larger investment shortly before that, and then this one had come up and I wanted to not miss out on it, and so I decided to go ahead and do it. It literally cost me $50 and 4% interest payable back into the account, and so technically the only double taxation is on the interest that I'm paying back to myself when I go to take a distribution from the account again. Amortized over 5 years. Payments made out of every paycheck every couple weeks. I honestly forget about it half the time. But that particular property happens to be one of the few dogs that we have. And, looking back, I probably wouldn't do that again for that property. But if it was for one of the cash cows that we have, and we have several of those, gladly would do that again over and over. So I think if you look at it as, two different decisions depending on how you structure those. If is the loan in and of itself good or bad decision, I'd say if used for the right things could be good decision. In that particular case, even though the intent was to use it for something productive and investment oriented, and that's what it was ultimately used for, that investment so far has not lit the world on fire, and therefore, maybe that's a form of resulting, but I kind of look at that and I'm like, well, shit, I kind of sort of wish maybe I didn't do that and I just passed on that property completely. So if you want to buy a piece of shit rental, I have one for sale. In fact, we get texts almost every day, and every now and then we'll get something in the mail, one of those fake checks from a wholesaler saying that they want to buy the property. And then every time I tell them how much I want to sell it to them for, they usually stop responding. And then I just do fun emojis like the suck it emoji, and there's some other ones I do. I have a lot of fun with them. Anyway, I digress. Okay, Dog Shit Dental. This was the last podcast we did. This show was hilarious. Here are my thoughts. Number one, who the fuck is this guy who is your financial advisor friend that you want on the show, and this guy just keeps pushing you off? Tell him to stop being such a pussy and get on the show. I actually screenshotted a portion of your email and texted that to him, and he just wrote back, ouch, and then we exchanged a few messages. I texted him a little while ago before coming on and recording this tonight, him and one of our other buddies. We got a little group text going, and I'll have a quote from him here shortly on the topic at hand, which is 50-year mortgages. So stay tuned for that. Even if I can't get him on the show live, which I'm going to work on him again and again and again, because he does actually listen to the show. Eventually, I think he'll break. But he is convinced that somehow through AI and everything else that, he's going to be found out and exposed and lose his job. And, hey, we all have families to feed, right? So I guess if you're worried about that, then maybe don't come on the show, but I really don't see that happening. Okay, number two. Okay, you went into how you used to work in the dental industry. All right, I'm not going to read that word for word. I did get that part of your message, and the two companies that you mentioned, neither one was the company that I alluded to in that episode. So there was another major player, another larger company, but it wasn't either of the two that you mentioned there. Let's see. Okay, number three, I'm probably going to skip this too, but you did talk about essentially pricing in the medical world and, larger carriers and billable amounts and basically how the whole thing's a shit show. And if you really want your mind to explode, as you said in your last sentence there, look into pharmaceuticals. The prices of those things change every day, especially when you involve another party, which is the pharmacy. Agreed. I totally understand what you're saying there. You did mention something about bougie medical, essentially a concierge service where you pay an annual fee. This is something I've not looked into. I did get the link that you sent. Not sure if you've seen this, but in my area there has been this push to something I like to call bougie medical. It's like a concierge service. You pay an annual fee. They still bill your insurance for visits, but they limit the amount of people they see, so it's a more personalized approach. I was actually thinking about doing something like this, especially since I believe you can use your HSA to fund this, but my biggest issue is actually getting an appointment to see these fucking doctors. Some of them have to be scheduled months in advance. With this service, you see doctor same day or next day. See link below for one in my area. but these concierge medical practices seem to be opening up everywhere in my area. Maybe it is a hint that I live in an area that a bubble that people say will pay an extra $3,000 a year or whatever it is to have a personalized approach. So yeah, I mean, it's not, I don't have enough experience in that area to really comment on it, other than I've heard about it before and I've thought about it, but I guess the pain for me as far as waiting or being able to get in to see, a doctor or whatnot hasn't been to the point where I'm ready to, to make that extra investment, if you will. So, but, good feedback there. And then finally, you said, when you and Cube Crusher open up Dog Shit Dental and expand to Dog Shit Medical and Dog Shit Pharma, let me know. I'll sign up. Will do. Hope you've been well. Sorry for such a long response, but have to give my feedback on the past couple of episodes. No problem. All right. So there's where we are there. I had another text come through. Let's see if I can pull this one back up. From somebody else, also a premium subscriber, by the way. Let's see. Just listen to Dental Podcast. I do think the premiums are well worth it. If you should need extra care or have unexpected expenses come up, the annual premium pays for itself. Yeah, that is true, but that's not necessarily always going to happen year over year. But again, insurance is a numbers game, and I see both sides. I evaluated both sides, and I'm not sure if I've come back on here since I've done that episode, but spoiler alert, I did go ahead and actually utilize the employer provided, that we still have to pay for, of course, but partially subsidized, employer provided, more expensive of the two options, dental insurance plan through the workplace. Okay, that's what we have for feedback there. Let's see. All right, let's get into today's topic, which is 50-year mortgages. And this is something that I've seen a few videos on YouTube pop up. I've seen some articles come out about it. Quite frankly, I kind of live under a rock somewhat intentionally. So, this has been out for a little bit of time now anyway. And just thought it was interesting and wanted to kind of comment on it. I watched a YouTube video, I think this was maybe early this morning, where there was a personal finance YouTuber on there who broke this down, and he tried to do as close to an apples to apples comparison as he could. And one of the things that he kept the same was the interest rate. I also looked at an article from the New York Post. This one was actually published just a couple of hours ago on today, November 11th. And they had a couple of quotes in here from different people. And in one of them, they basically did the same thing, where they took the monthly payment for a $400,000 home. They assumed 20% or $80,000 down, just under a 6% interest rate. According to them, almost $2,300 would be the monthly payment for the 30-year mortgage, and that would drop to $2,055 on a 50-year mortgage. So less than a $250 per month difference. So my thought there would be, well, let's back up a little bit. Why is this even something that's supposedly under consideration? Quite frankly, I don't think it's ever going to happen. Maybe not never, but I don't think it's something that's likely to happen in the imminent future. I could be wrong. And I don't think it solves the problem. I think everybody wants to talk about housing affordability being a problem, and I don't disagree with that. I agree that housing affordability is a problem in the United States. And I'm not on here to get political in any way, shape, or form. So no matter what I say, please don't take this as politics. I don't give a shit about politics. I'm just talking about, here's what Cashflow King thinks, and we're having some fun, right? I don't think it's going to solve the ultimate supply and demand issue. Especially, if anything, I think that it could possibly make things a little bit worse. And going off the numbers that we just kind of touched on there from this article from the New York Post, they're keeping that interest rate the same. It's not even a difference of $250 a month. I'm sorry. I understand there's been inflation. I understand that costs have gone up. But if you are basing a primary residence home buying decision on a difference of $250 a month, I think you're already setting yourself up for failure. To put it more bluntly, in the words of Cashflow King on the Real Talk explicitly rated Real Talk Personal Finance podcast, you're fucked before you even buy the house or the property, right? I don't think $250 one way or the other in a given month should be a make or break point for anybody. And I know that's going to maybe sound crazy to some people, but if that's really what's stopping you from being able to afford a home, maybe you need to rethink some other things, whether that's an expense problem, an income problem, a combination of both, or you can blame it on inflation or whatever you want to. I'm not saying I have the answers, I don't. But I think for 250-ish bucks a month, it's just not cutting it. And yeah, I'm okay. So a 5-decade mortgage would likely lower monthly payments for homeowners, according to Sandberg. If that monthly payment is the only thing that is stopping you from home ownership, go for it. You can change it later, Sandberg urged. Okay, this is what got me. Take, for example, someone who is in the process of purchasing a home and also making installments on a car loan that they know will be paid off in 1 year. Well, then you can refinance it later when that car is paid and you're in a different financial situation. Again, fucking wrong. I don't agree with that. I don't agree with that, because if you're making installment payments on a car, and I've talked about this at least loosely in other episodes, most people that have a car payment because they have to have one. Fewer people have a car payment because they choose to have a car payment, right? And I don't know if that makes sense to a lot of people, but just because you can pay cash for something doesn't mean you should. And depending on your liquidity needs and your investment goals and your investment thesis and different types of investments that you're using, if you can pull off some sort of financial arbitrage that works in your favor, you can make an argument that, hey, go ahead and take the loan and invest the money, or use it for this or use it for that. Most people, unfortunately, they're not in the position to make that decision. So if this person has a installment loan on a vehicle, we're going to assume that they have that installment loan because they have to have it, not because they want to have it or choose to have it, but because they have to have it. Okay. This same person also having $250 a month be a meaningful amount of money for them in the context of a home purchase. I just think when you put all that together, there's just so many things that alarm bells are going off in my head. Okay, first of all, if you have less than a year left on the loan and you're putting any sort of reasonable amount of money down on a home or have any sort of liquidity or cash at all, one consideration, if you needed to, because of a debt to income thing, I can understand that. Then, okay, maybe you kill the auto loan at that point right beforehand, or you just suck it up for less than a year in this case and know that you save a little extra and you have a little bit more of a cushion and you're able to float that until, I don't think you make a fucking refinance decision on a home that you're going to pay all kinds of fees and closing costs and everything else on getting set up in the first place because of the quote unquote inconvenience of some installment vehicle loan that was going to end in fewer than 12 months. It just doesn't make any sense to me, right? So you either fix your timing on that or you get your financial affairs a little bit more in order before making those decisions. And I know, playing the devil's advocate here, you could say, well, wait a minute. What if it was the $250 a month and it was their, whatever the number is, X number of dollars a month. Say it was, $750 a month to make them nice and round for the car payment. So that's $1,000 a month to that individual for whatever, let's say less than a year, call it 9 months. Okay, $9,000. Yeah, that's a lot of money. But once again, in the context of buying a home, $9,000, generally speaking, should not be an earth-shattering amount of money. And if it is, I would argue that that individual may not necessarily be in a position where they're ready to pull the trigger on that home. And I certainly don't think and agree with this article that the person could just go ahead and refinance later. Of course they could. Yeah, sure, you can. But by the time you pay those additional fees and costs and everything else, they're going to look back and probably wish they did something else. Probably wish that they tightened up their finances, or they waited till the car was paid off, or they killed the loan first, or they did this, that, or the other thing. I just think that's a really poor example from this article. I think it's a great example. I think it's a poor quote to put into this article about reasons that somebody would want to get a 50-year and then ostensibly quickly refinance into something else. I'm not saying that if you get a 50-year, you're going to be there forever and you're going to be there for 50 years. Most people would argue that you're probably not going to be. But I don't think it's as simple as, well, yeah, fuck it. Just go ahead and get the 50-year loan and then, 9 months later refinance out of it when your car's paid off and you get a different loan. Like, I don't think that's the answer, in my opinion. All right, so there's some other stuff here. Let me see if there's anything else I want to talk about. Yeah, a lot of this is pretty straightforward. Talks about the additional interest paid over the life of the loan. I don't think that's news to anybody. But the biggest thing, and we did a show on this, I think it's called The Power of Your Mortgage. This is one of our shows from quite some time ago. And we did some numbers and comparisons on a 30-year versus a 15-year and the whole, philosophy around that. And if you were to invest the difference instead of putting all that into the mortgage and things like that, then I would argue if you look at the differences between a 15 and a 30, you're going to see in terms of dollars and a little bit also in rates, you're going to see some differences there. When you're looking at 30s versus 50, I just think there comes a point when, and I'm not really, maybe I should have sat down first and kind of fully thought this through, but then I think my comments would be almost too well organized and orchestrated, and I kind of want to do a little bit of this on the fly anyway. But most people would probably expect me to say, hey, if you can get a 50-year loan, especially on a rental property, and save a couple $100 a month in the payment, and increase your cash flow, and therefore keep your DTI at a certain level and not let that get out of whack too quickly, and you can scale and you can grow and you can create more and more cash flow and financial freedom and da-da-da-da-da. I don't necessarily know that that's wrong. I don't necessarily know that I would be against it. If I was offered a 50-year loan on my next rental property versus a 30-year loan on the next one, would I take it? I really don't know. I'd have to sit down and think about that. But I think it kind of crosses over to the point where there's just this sense of like ridiculousness. I think there might actually be a show out there still called Ridiculousness with the skateboarder kid. What the hell's his name? Is it Bob? Rob something or other? I don't know. Really interesting dude. If you ever get bored, I don't know if that show's still on or not, but I've watched it a few times, and it is as the title says, pretty ridiculous, and there's some cool shit on there. But anyway. You kind of cross over into that area, right? 15 years versus 30 years. Yeah, that's a 15-year difference. Okay, fine. But then when you go from 30 to 50, yeah, it's only a 20-year difference. But at the end of the day, it's like, all right, yes, I'm one of those, I'm not in a rush to become mortgage debt free or anything like that. We've talked about that on the show before. But do I want to stretch it out to 50 for the sake of stretching it out to 50 to eke every little bit of, possible arbitrage, cash flow, alpha, whatever you want to call it, out of it? Or does there come a point where you're just like, you know what? Fuck it. 30's fine. I'm not going to be in a rush to pay that up. But when it's paid, it's paid. That's okay. Could I have eked out an extra couple properties and an extra couple dollars in cash flow and da-da-da-da-da by going with a 50? Yeah, maybe. But I think there comes a point where you draw a line in the sand. You're like, you know what? Like, this is good. This is fine. Like what's next? A 100-year mortgage? Okay. Well, once everyone gets on board with the 50, if that ever happens, and then people start talking about a 100-year mortgage, like it just gets to the point where it's like, all right, this is fucking ridiculous, right? So I don't know what my answer would be from an investment standpoint, and that might be the only situation where I think I would have a little bit of hesitation in making that decision. But as a primary residence, I still don't think it's the answer. And it all goes back to there's multiple issues at hand, and I don't think this solves any of those. So let me skip over to ChatGPT because I had a few things in here that I wanted to just to highlight here. Okay, so yeah, repaying the home over 50 years versus 30, a way to help housing affordability. Yeah, they do the same type of example. They quoted this from the Associated Press and one of the news sources here, where the difference was, it might have been pretty close to the article that I was reading. Well, yeah, it was like $260 a month roughly between the two. Again, I think that's one of those examples where they're using the same interest rates. And so one of the other things that was brought up in a couple different sources was that if the loan length term is 50 years instead of 30, then there's typically going to be more risk to the lender. The lender's going to want a premium for that. Therefore, the interest rates are likely to be a little bit higher on the 50-year versus the 30-year. So now when you put that math in there, all of a sudden, I think there was an analysis in here. Let me see if it ended up being closer to a $500 a month deal, which I think starts to kind of knock on the door of like, okay, we're starting to get into some meaningful dollar amounts probably for most people. And then you can start taking a look and see, okay, does this actually make sense or not? So, all right, typically they're saying that a recent analysis said that a 50-year term could have anywhere from a 40 to 60 basis point or roughly a 0.5% higher than a 30-year fixed mortgage, okay? And then when they did the monthly payment analysis, yeah, in this instance, it was over $450 a month, so approaching $500 a month. And they did same type of situation where, you know, it was a median priced home. They did a loan amount for simplicity of $400,000, but they had the 30-year interest rate at 6.25. They had the 50-year interest rate at 6.8. And so with the longer term, which is going to be lower payment, but then the higher rate still had a lower payment versus the shorter term of 30 years and the lower rate of 6.25, but it still came out to, like I said, over $450 a month. I think when you start knocking on, I don't know why, and maybe I'm just pulling that number out of my ass a little bit, but $250, probably not a big deal. When you start getting into 500 and above, I feel like, okay, that is a larger number that could start to make a little bit of a difference for somebody. But I still, again, don't think it solves the supply and demand issue. If nothing else, it's going to provide ways for people to get into properties for a lower monthly payment, which is only going to increase demand on an already constrained supply, which is going to further push prices upward. And so I think that's why there's a lot of people out there talking about, well, this is really just a way for, you know, the agents to make larger commissions, for, you know, the banks basically to get rich and force people to pay more interest on these loans. And even though they're saving a few $100 a month, they don't realize they're going to be paying hundreds of thousands of dollars more over the life of these loans. People are talking about if you get a 50-year mortgage and the median age of a homeowner today is approaching 40 years old, you're going to be fucking 90 before the thing's paid off, assuming you even stayed there that long, which is longer than average life expectancy. And so there's all these, you know, considerations. There's probably some memes out there about, you know, hey, you know, we only have 12 years left on the mortgage. It started in the last generation or whatever. There was a couple of those floating around there. So, I mean, yeah, there's lots of things to think about here. I don't think it's going to happen. There's some lender issues as far as government-backed loans and what those look like, and some things that were going to happen in order to make the 50-year loans conducive to fit within those parameters. And that's going to be a longer issue, a bigger thing. I don't know. I don't know how I feel about this. I think real estate investors may find it intriguing and interesting. I think anybody that fools themselves into thinking, well, can't afford it on a 30-year, but jack the price, jack the rate, and extend my loan terms out 2 decades and sign me the fuck up. I just don't think that's going to happen, but who knows, right? I guess theoretically that's possible. And then I mentioned, so I said, what do y'all think of 50-year mortgages? And so, this is funny. My first buddy writes back, great for a rental property. Well, I mean, yeah, for the reasons I mentioned, I guess you can get on board with that, and you can make the argument about, you know, where those mortgage payments are coming from ultimately. And then my other buddy, the one that Cashflow Rockefeller Prince like to call the P word, who will not come on the show. First one, actually, he was on the show, I think. He was on, I'm trying to remember what his code name was. I think he was the, who's the wrestler guy? The one, the only, or it was the Financial Bloopers episode that he was on. We did a Financial Bloopers episode. He was on the show, the first guy. Great for a rental property. Second dude that will not come on the show yet. He said, mixed. It really doesn't save that much on the monthly payment. So for the average person, ... okay. But for investment reasons and low interest rate environment, ... okay, I agree. And then he says, I could see it being yet another tool that keep poor people poor and make rich people more rich. I think that's actually a pretty good summary, especially that last part that he wrote there. I don't think it's really going to help the issue. I don't think it's going to help the people it was designed to help. I don't know that it's necessarily a windfall for the banks, the bankers, and the real estate agents, but it certainly doesn't seem to hurt them or wouldn't seem to hurt them. But I'm not sure I love it. And who knows, maybe if they start offering those on rental properties, it would be of interest. But again, you're typically probably going to have interest rates commensurate with those longer time frames. And depending on what your goals are, you could probably figure out a way to use those to control DTI, just like I mentioned before, and scale up to a certain point, and then just plan to start liquidating portions of the portfolio to just, kill off some of the other loans if you needed to. And you can get creative with it, but I still don't know that I love it. It kind of flirts on the line to me of interesting, could be cool, and like, this is fucking ridiculous. That's my take anyway, at first glance. We'll see what develops. We'll see what this thing turns into or not. Feel free to, I think I took out the thing. I tried to clean up the show notes, by the way, a little bit. We had too many links in there. We had one that went to like the Buy Me a Coffee site. We had one that also offered subscriptions on there. One of them was, I think, $1 a month for a Cashflow Cougar subscription or something. We kind of like joked around and just like had a whole bunch of shit on there. I took a lot of that down. I do have a link on there that says Your Mom is Hot. You can click on that if you want a good laugh. You can always email the show, realtalkpersonalfinance@gmail.com, and we will get back to you, or we'll read your email on the show, on the air like we did today. We appreciate everybody listening. Cashflow Rockefeller Prince, always welcome your feedback. We would like to get some others' feedback as well, so feel free to write in. Not sure who's the guy that was supposed to get back with us this year. We did a listener finance review. I think it was, Big Brother K. I don't know if he still listens to the show or not, but Big Brother K, where the fuck are you, bud? And why the hell aren't you premium yet? You know what I'm saying? But hey, if you have an update and you want to do the part 2 listener finance review, let us know where you're at and how 2025 has been for you. We'd be happy to take a look at it and maybe do another show for you. All right, let's see. We will have some drawings coming up here soon. Probably start those, I would say, right after Thanksgiving, coming into the beginning of December. Probably we'll do, I would guess, if I can crank. I don't know if I can crank 4 episodes in December. Maybe we can. If nothing else, I'll just announce the winners or something. But we'll probably do one a week, and we'll do a weekly giveaway for the month of December, leading into the holidays, Christmas, New Year's, and whatnot, and go from there. That is only going to be for premium subscribers, so feel free to check that out. There's only a few links left, one of which says Your Mom is Hot in the show notes, so feel free to click on that, get yourself signed up, refer your friends if you want to. We still do have our referral program for every 2 referrals that you send our way. We'll take care of you. We appreciate it. We're still working on getting the merch back up with the new vendor. I finally got my fucking Real Talk Personal Finance puzzle after threatening to take legal action against the old vendor, and they resent it because it never got delivered the first time, even though somehow the tracking said it did. It sure as hell didn't, and nobody steals shit around here. So anyway, finally got that. Cool item, but we're not going to probably do that on the new store. So anyway, I'm rambling. All right, guys, have a good night. Thanks for tuning in. We appreciate you. See you in the next episode.
Check the mic and make sure it sound right, boys.